Investment term for the day: Voodoo economics. Voodoo economics is a derogatory phrase used by George H.W. Bush in reference to President Ronald Reagan's economic policies, which came to be known as Reaganomics. Before George H.W. Bush, also known as Bush Sr., became Reagan's vice president, he viewed his eventual running mate's economic policies less than favorable. Reagan, the 40th U.S. president, took power during a prolonged period of economic stagflation that began under President Gerald Ford in 1976. In response, he called for widespread tax cuts, the deregulation of domestic markets, lower government spending, and a tightening of the money supply to combat inflation. President Reagan was a proponent of supply-side economics, favoring reduced income and capital gains tax rates. He believed that the savings generated by companies from corporate tax cuts would trickle down to the rest of the economy, spurring growth. He also assumed that companies would eventually pay more taxes anyway, boosting the government's coffers, as a healthier economy would encourage them to increase volumes. In 1980, Bush Sr. described these economic policies as voodoo economics, arguing that supply-side reforms would not be enough to rejuvenate the economy and would greatly increase national debt. Bush Sr. then changed his stance after being appointed vice president by Reagan, first denying that he called Reaganomics voodoo, and then claiming that he was kidding when footage was dug up showing him using the phrase. Bush Sr. was criticized for characterizing the policies of his then political rival as voodoo economics, among other things. His comments were viewed as a spiteful way to discredit Reagan while running against him in the Republican primary. The belief was that motivating the wealthy would invigorate spending, increase confidence among the rest of the public as their salaries potentially grew, and bring the economy out of the recession it had been experiencing. Furthermore, it was believed less government spending and reduced oversight would give the financial industry in particular a much-needed boost. Those expectations did not exactly take shape as planned, though some aspects did prove fruitful. During President Reagan's 2 terms in office, unemployment fell considerably, disposable income rose, and inflation was brought under control. And that was your investment term for the day. And that was your investment term for the day.